Hello guys, welcome to episode 2 of the Foundation series. If you haven't seen the first one, please go back and watch that. The video for that is on my channel. In that video we talked about higher time frame direction and how we can use that, and basically usually the outcomes when we come into certain levels. In this video we're going to be looking at lower time frame 5-minute liquidity and how we can use that. If you like the video, please give it a big thumbs up. It helps with the algorithm. Also, if you would like to join my free Discord, the link to that is in the description as well. So let's get started then. So as you can see on the chart here, I've got some price action. Just so we can clarify, when it has a BB, that means it is a body break, and then when we have a WB, that means it's a wick break. Okay, I just didn't want to mark out all of the candles because I feel like that would have taken a lot of time. We'll have a look at some on chart examples shortly, but just for now, we're having a look on this diagram. So when identifying 5-minute liquidity, a body break of a 5-point fractal high is a valid 5-minute liquidity. Use a fractal high or low as the liquidity level. So say for example we break a fractal high here with a body, as we do on this diagram. The low in this example, because we break to the upside, would be the 5-minute liquidity point. Okay, as we follow price through, you can see we get a body break here, and the high in this example, because we break to the downside, is the 5-minute liquidity. Now if we get a weak, sorry, not a weak, well it is a weak break, but a wick break, that means there's no 5-minute liquidity and we should ignore it. So we have same day versus previous day 5-minute liquidity. 5-minute liquidity I mark out in red usually on my charts. This usually serves as a continuation or liquidity targets or internal draw. Not reliable for reversals unless high time frame context supports it. So say for example we're coming into here, and say for example in this example we're bullish, we should not reverse from this point here. All this point should really do is possibly give us a pullback to then continue our journey into the high time frame point of interest. Now previous days 5-minute liquidity, this has a much higher probability of causing reversals, used as major intraday turning points. Okay, so say for example we're coming up here, we have a body break here, we are generating liquidity, we have a body break here, we are generating liquidity, we have a body break here, we're generating liquidity. Okay, and we also have a body break there for the generating liquidity. So for me right now, as we're going up, I'm only really looking for these levels, and I'm waiting for price to take these so we can then continue the move up. Now as soon as we hit this, usually this will be paired with, for example, a previous day's high or a previous day's low or an EPA on the H4, and we will come into that, and then we will get some confirmation that we'll talk about in a later video. We'll get confirmation that price is ready to start moving down, and then as soon as we get that, all of these things that we were looking to buy from now become targets. Okay, how bias controls the role of the 5-minute liquidity. So work inside your higher time frame POI. So you can use 4 hour, 1 hour, even 30 minutes sometimes. Any same day liquidity you expected to act as a continuation stops being valid once price reaches a higher time frame point of interest. So yet again, like I was just saying here, if we come into some EPA, all of these lows here with body breaks, these are now going to be seen as targets. Okay. Something I haven't wrote there as well, and I want to quickly mention it. When we come into a level, so say for example we're coming into this level, we will often make liquidity to target after running into it. So what I mean by this is, say for example we're moving up here, and I'll just do this like so. Say for example here we have a wick break. Here we have a wick break as well. And we run into, say for example, a previous day's liquidity. We may not reverse straight away because we may need to then create a low here to target, because the most simplest way for the market to work is every buyer needs a seller, every seller needs a buyer. So if we are wanting to sell from here, we are needing people to look to buy from here, whether that's at the break and retest, whether it's at 50%, whether it's at like a little order block down here, whether it's at a fib level. Regardless, we're still looking for people to be having looking for reasons to go long here, so then we could potentially absorb their liquidity and feel that move down. So say for example here, I have no liquidity and no body break. If I have a wick break here, I would not be as confident in that. Obviously we have this liquidity to target, so I'd still be confident, but if we make one just before we take it or just after we take it, then it's a quite good confluence. So practical logic, break a 5-point fractal with a body, then you mark liquidity, check the color, red same day continuations and targets, purple previous days reversals. When price enters a high time frame POI, flip your expectations, earlier continuation liquidities are potential draws where price can reverse from. So let's have a look at this happening on some charts on GBP USD. So what I would do when I'm looking for these is I'd start at the previous day. So I'd have a look and see basically where have we had these breaks, and I follow it from left to right, and I'm just moving over everything and I'm just looking for breaks. Now what I'm more concerned in here is things that haven't been taken. So everything within this kind of range here has been taken. So if I was trading this day here, which is Thursday the 27th, which is actually today, if I was looking to trade this day here, I'd only be interested in the ones that have happened and haven't been taken. So you can see here that if I mark this out over here, we have a body break. So for me, this here would be a 5-minute previous day liquidity. Now, as we go from left to right, some people may be marking this out. However, if we look and follow it almost like a roller coaster, we go up, okay, we come down, this here is a wick break, so there is no significant liquidity here. Okay, now what about this? Well, we just don't look at this. This is not anything we're interested in. So then yet again, we go through here, we see a wick break. So what does that mean? Well, at this low, there is no liquidity. As we are going through, keeping an eye out, and all of a sudden there we get a body break. Oh, I've got so many things, I'm clicking on the wrong thing. So that's a body break, and that would mean that this low is 5-minute previous day's liquidity. Now, just going a little bit off topic here. So I'm sorry, 1 second. I'm just gonna move this out the way so we can zoom out a little bit more. There you go. So if we have a look here, okay, and say for example, this is price. Price is going to move down, okay? If price taps this, what should happen? Price should, within a quick amount of time, start to move higher, okay? If price does this, are we likely to move higher now? No, because we've not reacted straight away. The likelihood is now that we will continue, maybe find something like red to look for continuation shorts, and our next point of call would be this point, okay, like so, and then we could expect reaction from there. Now if we have a look to the upside, there is literally nothing that we could look to take from this previous day, so then we need to start looking across to the left. So if we look across to the left now, we need to find zones where we could reverse from. So we have this, we have this, okay, and you can just see here, if I just mark these on, because this is the educational video. I won't do this all the time, but you can see here where our breaks are occurring. See a little breakdown there, like so. So all of these little levels here are things that could give possible reversals. Now just let's quickly have a look on the high time frame, just see what we can correlate that with, and we can correlate that with EPA. Okay, let's move all of these over now, and then we'll get back to the interesting stuff. Okay, so you can see how all of these played some part in price reversing. Okay, so price has come up into here, and for argument's sake, we'll also have a look here. There's obviously a higher time frame EPA there. I'll just put my indicator on so you guys can see it there. Okay, that blue thing. So from here, price should reverse from here, okay, once we get confirmation. Okay, we've got a higher time frame POI, we've got lower time frame liquidity, so price should now reverse once it gives confirmation. Yet again, we're not going into that in this video, we'll go into it in a later video. And now we can start to see price moves to the downside. Okay, so now price has moved to the downside, and we want to be looking at, have we been creating liquidity to the upside in this down leg? And you can see we get a body break here. Okay, we get one here, we get one here. So I would say we have got significant liquidity at these points here, here, and here. Okay, now obviously while we were coming down, we were generating liquidity at these lows. Okay, these were things that we could have been looking to target to take off some partials possibly. So yeah, actually this, if you somehow caught short some up here, yeah, again, not getting into stuff like that just yet, but if you caught short some up here, this would have been where you go break even, and you'd have taken a profit there, and then this would have been TP2. Now, when I'm taking a trade, oh, you can even see here we have a wick break. Missed that one, not wick break, sorry, body break, and that there would be, yeah, high. So when we are coming back up, because we could at any point reverse from any of these levels, okay? Just to quickly reiterate, this came down into a refinement here of this before reversing. Just if you're wondering why it didn't reverse instantly as well, it's got something to do with entry and how we find our entry. It just wasn't ready yet. And then from here we can start to see, right, well, we're now bullish, okay? We're reacting from this POI. We would have had confirmation from our entry, and this right here is where I would have been now break even, and I would have taken my first partial. Now what we need to be looking for is, as we are going up, are we having any body breaks? So we're getting a body break here. Nothing else really by the looks of it. And I believe on some brokers this is a high, on other brokers it's not. So it will all depend on which broker that you use. On some of them, what I like to do is, because we're in replay, we can go over to Oanda, and you can see Oanda, that exact same point is a fractal high. So I'd flick between those two. If it's on one, then I'd take it if you're a little bit unsure. So you can see here how these levels are now giving pullbacks. However, we would not be looking to go short off of these until we came into another high time frame H4 zone. So what we could be now looking for is price to pull back into these to then give continuations. Obviously it doesn't have to, it's more of a reactionary thing, and we'd just be waiting just to see what happens. It looks like price is now starting to make its way up. Now, what I want to quickly bring to your attention as well is how before we took this, we made liquidity, and then even after we took it, we made liquidity. So there was enough liquidity to basically fuel this move up. Now, as we stand currently, we may get a little bit more of a push down to come into here to retest. I know on the 30-minute we have this POI, this inside bar, and that could very well give a nice reaction. However, I think overall our next target now would be the next draw on liquidity. So if we have a look at the higher time frame, this is using a bit of last week's lesson, but our next draw should be this, okay, this strong high. So all the way from this POI, if I get my ruler out, all the way from this, the low of this POI up to here, we could be, oh, messed that up a little bit, let me try again. That could be a 71 pip move, a great move, and this happens daily, okay? If we go back and just have a look, you can see that we had the exact same thing here the other day. This here was a current day, but this here, because of price broke through here and gave a body break, we could have looked at this, and you can see right on that news from the GBP, right on that news, sorry, previous days, we get that reversal, and that was a move up to the next point of interest would have been there. So your next H4 higher time frame, you could have easily caught a great move of nearly 100 pips just in about under 2 hours. So if you've enjoyed this video, please give it a big thumbs up. If you've got any questions, feel free to join my Discord and ask them. And thank you for watching the video. I'll see you in the next one.